Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, 2017 has treated the resource juniors with a strong January effect, the rally that usually greets the new year after the misery of year-end tax loss selling. Judging from the recent flurry of aggressive financings, a rally is still going strong. Have any of our Discovery Watch juniors raised big money?
Well, the most impressive money raise has been by Nighthawk Gold Corp, which we introduced during the first week of January this year for its Kolomak project in the Indian Lake Greenstone Belt of the Northwest Territories. Now, Nighthawk is one of those hybrid-type exploration juniors, which has an existing deposit of about 2.1 million ounces that's open-pittable. It's, however, 1.64 gram per ton, and it probably needs a better gold price to be developed. So in the past year, Michael Byron has been leading the charge to explore this project area for higher grade zones related to these mafic sills, which are very similar to what we see in Australia's famous Kalgoorlie district. Now, on February the 7th, they announced that they had found a new sill they call the Nice Lake sill, which is gold enriched, and it's about 1.5 kilometers east of the Kolomak sill that holds a good chunk of the existing resource, and they've traced this for about 1.3 kilometers. So this is a whole new focus within this Kolomak project, and it's sort of the fruit of doing all this prospecting work last year. Well, after this news came out, I mean, the market was already pushing up the price of Nighthawk because gold has been trending up so far this year, and they liked the way the story was evolving. But this news release seems to have triggered a $10 million bought deal from brokerage firms. Part of it, 70 cents common units, and the other part, 93-cent flow-through units. Now, a bought deal is different from a typical financing done by a brokerage firm where they agree to try and raise, say, $10 million on these terms, whatever, 70 cents and so on. And if the stock ends up below that price, it's pretty hard to sell a financing that's being done at a premium to the market. So a bought deal is one where the brokerage firms actually agree to purchase this stock for their own account, and the company's guaranteed to get the money, and then it's the brokerage firm's job to sell the financing to their various clients. So this is the ideal type of financing for a junior to get because it knows it's going to be guaranteed the money. Now, as a sign of how strong this market is becoming, the next day, this $10 million financing was doubled to $20 million, mainly by adding common units as opposed to the flow-through units, which is a good sign because it means it's a broad-based audience that isn't necessarily restricted to Canadians who are the only ones who can benefit from flow-through, who are paying attention to projects such as the Kolomak of Nighthawk Gold Corp. So that was a really good example of how the money is starting to go back into these juniors that have significant projects with district-scale potential.
I understand that another Discovery Watch junior you recently introduced is doing a rights offering version of a bought deal. Can you explain the Rainy Mountain Royalty Corp rights offering?
Well, we introduced Rainy Mountain also in January for its Brunswick project in Ontario, where it's the property covers the Rideout Fault, which is the projected continuation of the Cadillac Larder Fault that hosts all these deposits in Timmins and Kirkland Lake area. Now, this company has about 27 million shares and probably another 20 million warrants at different prices. But they did a deal with Mackey Research, where Mackey Research agreed to guarantee at least $500,000 of a rights offering that, if fully subscribed, would raise the company $1.3 million. Now, a rights offering is different from a financing or even these so-called existing shareholder exemption financings. In a rights offering, every shareholder gets a right per share. In this case, it will take 2 rights and 10 cents to acquire a unit consisting of one share and a half warrant, which is exercisable at 15 cents for the first year and 25 cents for the second year. Now, usually these rights offerings are done on a best efforts basis. The financings and the rights offering goes X rights. In this case, it went X rights on January 26th, and it expires on February 24th. And during this period, all kinds of bad things can happen. The stock can end up below the exercise price. In this case, because there's a warrant attached, rights owners will exercise, buy the unit, flip the stock into the market, and clip the warrant as a free ride. So financings like this, typically end up close to the exercise price, or sometimes even below. And then in the end, people just say, what the hell, I don't care, I'm not going to bother exercising, and the company fails to raise the money that it was seeking to raise. In this case, Mackey has said, we will exercise at least $500,000 worth, and they also have the discretionary right to, in case the full $1.3 million is not subscribed, they will make up the difference, which could be, any amount. So this is it's not guaranteed in its entirety, but it guarantees the company at least $500,000 towards the drill program that they hope to start in mid-February on the Brunswick project, which is basically a blind target based on an arsenic antimony anomaly associated with the type of system that the Borden Gold Project, that probe found, is expected to be. Now, the one hitch is these rights offerings are only good for Canadian residents, and I happen to be a shareholder of Rainy Mountain, and the rules are that American shareholders do not have any rights when it comes to rights offerings. The rights are not issued to them, so I am not in a position, along with any other non-Canadian resident, to exercise my rights and acquire the warrant. It's a bit of a bummer that Canada kowtows to American protectionism in this way, but that's the way it is. This will give Rainy Mountain the money it needs to launch this drill program, which hopefully leads to a significant new gold discovery in the area that has opened up since probe found the Borden gold deposit.
Discovery Watch with John Kaiser will be back right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. Wesdome Gold Mines has broken through $3 on the upside. Is there any news from the deep drilling at the Kena complex?
There is news from Kena, but what got the stock started in late January was an announcement from the Eagle River mine in Ontario, where it is currently producing gold from a series of tabular, steeply dipping quartz veins. And people are sort of, so-so about this mine. But what the company did in late 2015 was encounter a different style of mineralization, which appears to be sort of a steeply plunging pipe-like body. And they could not really properly drill it from surface, so they did underground development last year and finally started drilling these targets, and they produced some pretty impressive results, up to 20 meters of, half-ounce gold or better, which is substantially better than what we have seen the company target in the Eagle River system. So they have 3 of these bodies. They're going to continue to outline. They've got the existing infrastructure there. So this definitely helps West Dome in terms of a gold producer from a mine that's going to end up having higher grade ore that eventually gets fed. But the Kena news, that came out a few days ago. As you recall, the Kena Deep target emerged last year when they came up with some absolutely spectacular gold grades, 40, 50 ounce per ton, what the street was calling gold porn. It was that spectacular looking in the visuals from the core. They've now drilled 29 holes, all from underground. They have 4 rigs going. They reported 21 holes so far. The last batch just came out. It's showing that the high-grade results are continuing. There aren't any of the big flashy numbers of 1,000 grams per ton or so that we saw before, but it is starting to show that this system has a strike of at least 550 meters and 400 meters down dip, and it's still open. And given the kind of grades that we're getting and that they're starting to figure out the geometry, it's starting to make sense to them, this is a major boost for the company because the Kena project has historically produced only 4.5 grams per ton. And of course, it's right there next door to the town of Val-d'Or. The existing mill is mothballed. The results so far indicate that the Kena mine is going to have a significant future. And as they keep going, hopefully we start seeing even better results, maybe start getting Red Lake type results out of this complex.
Aurion Resources has spiked during the past week after announcing results for its Risti Gold project in Finland. Has Aurion made an important discovery?
Well, Aurion Resources is our new Discovery Watch Junior with its Risti project in Finland. This is a prospect generated, headed by Mike Basha and backed by Toronto venture capitalist Dave Lotan, who took this company under his arm a couple years ago and has nursed it away from its rather unfocused prospects in various parts of Newfoundland and Nevada and so on, and refocused the company into the central Lapland greenstone belt of Finland. They did this in 2014, assembled about 300,000 hectares, and one of the projects, Kutuvuoma, they did farm out 75% to B2 Gold, which is spending money right now to try and find these sort of high-grade, medium to high-grade gold deposits, orogenic lode types, similar to those that we find in the greenstone belts of the Abitibi greenstone belt. What they reported on February 1st was results from surface prospecting. The field crews had come upon a 1150 by 700 meter area of quartz tourmaline vein blocks, some of them sort of barfed up from the ground and no longer in bedrock, others subcropping and so on. And they identified a series of fairly narrow parallel veins, 0.1 meter to 3 meter wide, striking in a northeast-southwest direction. But what they did was yield some spectacular grades. It's up to like 50 ounce per ton, many of them 1 ounce per ton. At this point, these are all just selective grab samples. They will need to trench these veins to see what sort of continuity there is of the mineralization across these veins, and ultimately they will have to drill this project. Now, in the prospect generator model, the dogma is that you must always farm a prospect out to somebody else. But this doesn't really make sense if the company does this religiously. But every once in a while, the company has to do heresy, such as Andre Gaumond did back in 2004 with Virginia Gold, when he came upon the Eleanor outcrop in central Quebec and said, "This is a keeper." And as you recall, some of the ideologues who were really pumping the prospect farm-out model actually put out sell recommendations to punish Virginia Gold for bucking the rule that one must always farm out and never really risk one's own money. Now, the beauty of something like Orion is the company appears to be treating this risky discovery as a keeper. And the stock rocketed from its sort of 40 cent price up to $1.50. They announced on February 8th a $6 million financing at $1.50, no warrants. The next day it got bumped up to $8.7 million. Now interestingly, the company did a financing at 40 cents in October for $2.5 million and also no warrants. As a result, there's only about 70 million shares going to be fully diluted and only, several million options. None of this warrant overhang. Dave Lotan passionately loathes the 5-year warrant dogma of Jabba the Warrant Hut. He thinks it's harmful for the company. I think this play, this new discovery, risky, done through grassroots exploration, and they cover 30 kilometers of a contact between a conglomerate type of rocks and older volcanics, similar to what we see in the Timmins-Kirkland Lake area, where the gold zones occur as splays off this and fairly high grade. This is a potential major new district play, and with 100% and only 70 million shares, this company could be the one that turns our Discovery Watch Junior into a very popular type of show to watch.
John, thanks for the update.
Thank you. You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.